Boom. All right, what's going on, you guys? It's Royce Jacob. Welcome back to the channel. In this video, we are going to be doing a macro analysis. We're going to be taking a look at a few of the key players across the financial markets. As many of you know, the equity indices did have a pretty rough day today. We'll kick it off with the S&P 500 and the Nasdaq on the charts. Both in the red today. Do they look like they want to pull back further? In my eyes, they do, and of course I will go on to explain why that is as we do dive into the charts on TradingView, talk some price targets, talk to you guys about what I see panning out over the coming weeks, and then we'll move into, after equity indices, we'll move into the VIX. So I want to talk hedges with you guys a little bit, okay? So the VIX, or the CBOE Volatility Index, is inversely correlated to the S&P 500. So if the S&P goes down, like it did today, the VIX goes up 11% today. Pretty impressive price action, but that's the beauty of the VIX. VIXY did pretty well today as well. I do want to talk a little bit about hedges. We'll take a quick look at VIXY on the charts, and I just want to show you guys kind of the potential of some of these hedge ETFs, and quickly talk about how I personally hedge my portfolio, at least in brief, in short, in the case that we do see a further correction in the equity indices, okay? So we'll talk some hedges. We will then move onto the US dollar, or the DXY, because of course, the general trend direction, the general movement of the US dollar will at least have somewhat of an impact on everything that trades against the US dollar, which is pretty much everything. So we'll see some middle ground with the US dollar, talk a little bit of fundamentals through all this charting. And I'll talk to you guys about what I see in the dollar and what impact I think that'll have. Again, pretty much on the greater financial markets because everything trades against the US dollar. We will then move on to Bitcoin and Ethereum. We're going to be pretty quick here, you guys. Cover these pretty much every day. Tomorrow, I will be recording a video covering crypto-related equities, so Bitcoin miners, blockchain plays, some of the stocks that we love most around here on the channel. So I'll talk those tomorrow, and then I will also incorporate Bitcoin, ETH, looking pretty decent right now. EOS. Shout out to the Waves fam. If any of you guys were involved in EOS, feels good to see EOS up like 30-40% today. Absolutely insane. So EOS is ripping. We'll cover that later in the week. But right now, we'll just quickly touch on Bitcoin and ETH close to the end of the video because I can't not make a video without touching on Bitcoin at least. So we'll do those, and then we will close it out with the shiny stuff, with God's money, silver and gold. Silver, in my eyes, is looking like a very, very promising trade right now. Gold, also looking promising, but from a potential return perspective, silver is looking very appealing. And again, shout out to the Wave Sam, all the miners that are going on in the silver ecosystem are looking pretty strong right now as well. So please let me know in the comments down below, you guys. I just want to shout this out right now. Let me know what sector in the markets you guys are most attracted to right now, because again, just looking at the markets, we're in kind of a weird place right now. It's kind of hard to dictate what's going on. Everything is a little wacky, and I do expect this trend to continue, a lot of sideways price action, but there is a bull market somewhere, you guys. There's always a bull market somewhere, so please let me know down below in the comments what specific sector within the greater financial markets you're the most interested in right now, okay? So I will ask that. As always, I will also ask that you please give the video a like if you do go on to gain value from it today, or if you're invested, or if you're hedging. Not even invest in any of these. Just give me your thoughts in the comments down below on what you think about everything we're talking about today. Just give me your thoughts. Give me your macro thoughts. Because, of course, you guys, talking about individual stocks is fun, especially if those things are ripping. But it is very important, especially in this market environment, in my opinion at least, to zoom out and take a look at the greater ecosystem, because ultimately the movement of all the macros, when you take a bird's eye view on a lot of this stuff, will impact the micro sectors that we like to play most of the time, okay? So give the video a like if you do want to gain value from it today. Subscribe to the channel if you're new around here, want to catch more content like this. And of course, check out my complete portfolio daily newsletter. First link down in the description. If you want a complete breakdown of my entire portfolio that I do update every single trading day, so call options, put options, stock positions, again, all the specific ETFs that I'm trading right now, that I'm hedging with, the specific silver miners, the Bitcoin miners, everything, literally an entire breakdown of my entire portfolio. I do update that every single trading day, once again during market hours, and with every update I send out an email newsletter explaining my thoughts to you guys, rationalizing my thoughts to you guys, that we're having the issues. I'm getting that solved. I think we're pretty much back online, so that's all good. Very happy that we were able to solve that. And yeah, I'm very grateful to any of you who do check that out. $15 a month. First link down in the description. And yeah, let's dive into these charts. All right, so the S&P 500 did see a pretty significant little correction today. Got the price range right here because I do want to talk about general if you look at the S&P 500, you can take a look at the SPY or the Spider ETF, Nasdaq. There's a couple other ones down. It's all the same thing, but these are just the tickers we're looking at today. So that's why I want to kind of prioritize the price range and talk just general percentage movements as opposed to like price, actual like dollar price targets. Okay. So S&P 500 down just under 1% today. We did wick up. It caught itself over the course of the trading day, but we did from a technical perspective, and we're on the daily candles here, you guys. It's pretty rare that I'll stick solely to daily candles, but during a macro analysis, when we're kind of zooming out, taking a look at the greater ecosystem, the greater landscape, I do kind of want to zoom out. So we're just going to be sticking strictly to the daily candles here. All right. So 2 days in a row, 2 consecutive days of red, and we did set a lower high or a lower low. I'm sorry. So high, low, barely moving. Did break out of this little ascending channel, very, very soft ascending channel, almost a sideways channel, but we did break below that. So there's trend lines that have been broken, set a lower low on the short-term uptrend. This gives me a reason to believe that over the course of this week, we will see more downside. So my initial price target that I'm pretty confident will at the very least come down to is going to be this green line right here. So a very strong line of support beginning in October of 2020, like late October, early November. Touch point right here. This is a trend line that will most definitely come into play, in my opinion. Again, the S&P 500, just looking at this, volume has been falling. Even if you take a look down here at the Stokes, the 4 hours or the daily Stokes, the stochastic RSI, blue just crossed over red to the downside. That usually implies that more downside will be ahead. And because we're on the dailies, that could span a few days to even a week or two. Okay, so I do think more downside is ahead over the course of this week or the coming weeks, dependent on if the support is broken or not. So I will be looking for a move of, at the very least, let's grab this price range right here. So from S&P's, the S&P's high, which was just a couple days ago, last Friday, I do think that will come down at least 5% to test this line of support. That's the first price target I have. But I would not be surprised, especially if we do break this support, that we come down to test this high prior to the high that we're currently on, the rally that we're currently on. So this high back in March, mid-March, came down, set a pretty significant correction right there prior to the rally that we're currently experiencing right now. Okay, so I do think that at the very least we will come down here, execute a 6% correction from the high from current levels. That would be about a 4% correction, and then worst case scenario for the S&P, in my opinion, because I cannot see the S&P absolutely crashing. I do not think that a crash like in March of 2020 is almost possible at all, because that was an absolute black swan, and just the macros around the dollar, around inflation. We'll talk inflation a little more as we dive into the dollar, but I don't think it's likely we see a crash, but I do think we could see an elongated correction, and I would not be surprised in the least to see my next price target come into play if we do break below this level right here, around $4,000 in the S&P, or like a 6% correction. I wouldn't be surprised to see this high come into place right here. So this high right here in September of 2020, just under a year ago, I do think could be a good level to look at. This was like this is the last level prior to a real significant correction. This is a weird area right here. Like the late summer of last year was a pretty weird time prior to this pretty organic, pretty solid just uptrend that we've seen since like November, since winter. But I do think this will come into play. That'll take us to just about $3,600, or a 13% correction from current levels. So from S&P's high to that level is going to be a 15% correction. That does not seem out of the realm of possibility at all, especially considering the volatility of the overall market environment. So I'll just say right now, by the end of May or by early June, because things can happen fast, but in this market, things are going pretty slow, surprisingly, but things fall a lot faster than they can climb, so that's important to keep in mind as well. There's so many fundamental arguments like the reopening and stuff, the fact that a lot of retail investors, if they start to lose money that they've gotten for free, now people have to start working again. If you start to lose money that you've worked for, that really changes your psyche around investing that money, and that might scare away some of the retail market, which we all know is a very prominent segment of the current market environment. So these are just things that are kind of floating across my mind. It would not surprise me, just to sum it up right now, we'll hop into the Nasdaq after this, if we see a 15% correction by early June. I'll just say that right now. Okay, so move on to the Nasdaq. Nasdaq has obviously ripped harder. For that reason, I do believe it can correct harder. The higher you climb, the harder you fall. You'll know that. So Nasdaq did also break a pretty solid trend line that kicked off way back in early March. So a very significant trend has been broken. Surprising, this trend has not been broken for over 2 months now. Very impressive, but gapped right below. We're gapping down. I do think that it's very likely that this area will come into play right here. This acted from mid-January to, I would say, like mid-March. So over the course of a couple of months, this area right here around 145, if you're looking at NDAQ, or from current levels, would be about 10% down from here. This level acted as a very significant ceiling. I wouldn't be surprised at all to see this area act as a new floor, especially because short-term support's broken. Again, the Nasdaq has been absolutely, like, if you look at this, that's crazy. Again, dollar has been devalued. We're seeing asset inflation across the board. That's what's happened over the course of 2020, 2021. But as we move into summer as well, which are historically kind of bearish months for the equity indices, for just equities in general, it wouldn't surprise me at all to see a pretty significant correction here. So from Nasdaq's high, I wouldn't be surprised to see a 15% correction there as well. At the very least, from current levels, that would be a 10% correction from here. Will we go below that? I don't know, but I do think a 10% correction is very, very likely over the course of the coming weeks. And again, this happened fast. What's this date range? So March 3rd to let's just say May 3rd, so 2 months. Over the course of 2 months, we climbed significantly. It wouldn't be surprising at all because, again, you fall faster than you climb for the most part. That's just how gravity works. That's the principles of life sometimes apply to the markets as well. So things fall faster than they can climb. I wouldn't be surprised if the price action that took 2 months to go up took 3 to 4 weeks to come down. Okay, so maybe by the end of the month, we do see that 10% correction. After that, I do think, we're just talking about this in the Discord as well, I don't think that we're going to see a rip again. I don't think we're going to see price action like this, see super exciting green, like a rally like this for a long time after this correction. I think once we correct this 10%, we'll go up, go down, kind of what Bitcoin looks like right now, which we will cover, of course, in a little bit. But mostly just what looks to be very volatile, but pretty much just sideways price action. So I do think we're going to go sideways for a while after this 10% correction. That's just my hunch, given kind of I'm talking really fast right now, you guys. I know we have a lot to go through, but I'm just kind of trying to rationalize some of my technical and fundamental thoughts for you. But I do think we're going to see a 10% correction of the Nasdaq. Let's move on to the VIX, talk a little bit about hedges right here. So the VIX, pretty exciting here today. The VIX has been doing pretty much exactly as I expected it to, as it broke back into this ascending channel. You'll love to see that. And the VIX actually did, although it did not close above this, did actually break this ascending channel. So I love to see that. VIX, the daily Stokes on the VIX, the blue crossed over the red to the upside, the opposite of like the S&P and Nasdaq, and that's bullish as well. So the VIX price target for the VIX right now is going to be to test this line of resistance on the overall downtrend that began back in October of 2020. Touch point here, touch point here. I think if we do see a rip, which again, this is how the VIX works. You go flat, you see a lot of volatility in the meantime, but every once in a while you do see that massive pop. And just looking at this, you guys, looks pretty symmetrical to me. I think we are due for one again. Given all the reopening, everything else that I just mentioned while we were talking about the equities, okay? So VIX looking promising to be. Again, when it comes to hedges, VIXY is the ETF that I trade for VIX specifically. When you're talking about shorting the SPX or the S&P 500 and the Nasdaq, there are other plays that you can use. SPXU is one for the S&P 500. SQQQ is one for Nasdaq. And if you guys do want to know exactly how I'm kind of structuring my portfolio around those ETFs, how I'm trading them, when I'm getting in and out, once again, complete portfolio daily newsletter. But again, if in this market environment, I feel, and always know you guys, my money's on what I'm saying, I do feel it's important to at least have some hedge in your portfolio if the waters are getting a little rough, which it looks like they are, and they obviously are, considering the S&P and Nasdaq just broke short-term uptrends. So waters are getting a little rough, in my personal opinion. Again, you guys always make your own decisions. This is just my opinion. It's very important to have at least maybe like a decent percentage of your portfolio in hedge positions, just to keep your wealth safe in the case that, again, we do see more downside. And yeah, that's just my opinion. That's my 2 cents. Again, I've been talking about these a lot more in the portfolio, in the newsletter specifically. So if you guys do want kind of just to know a little more intricately how I'm trading these, portfolio newsletter down below. Okay, move on to the dollar, or the DXY. So the dollar is in the course of what looks like kind of what I expected to playing out just this massive megaphone channel. So the dollar, as many of you know, if we zoom out here, has been just been getting absolutely annihilated over the course of the past year. Again, this high back here, this is the black swan, when all the equity indices absolutely fell off a cliff. Bitcoin, literally every asset, again, that trades against the dollar, fell off a cliff. The dollar went all the way up to 103, like pretty much 103. It's currently sitting at 90 for the US dollar, the DXY, which is the dollar weighted against a basket of international fiat currencies. That's a very, very significant move. Very, very crazy to see that price action in the dollar. And again, the dollar over the course, I'll call this the medium term trend, has been in this megaphone channel. So megaphone channel, for obvious reasons, it is a channel that is going like that. So currently in this megaphone channel, the dollar at the beginning of April, or in early April, broke a very, very significant uptrend, tested the top of this channel, coming down very, very fast in a downtrend, broke above it for a little bit, as you can see, was in this channel. Once it broke this nice ascending wedge pattern, broke out, really dumped, and we are testing previous resistance as new support now, which you'd expect. TA 101 right there, you guys know the drill. Previous resistance will act as new support. We're currently testing that, but we are still on a downtrend, and ultimately, I do think that over the course of this month, we will see the dollar continue its way down to test the bottom side one more time of this megaphone channel. So price target for the dollar, this could happen pretty quick, but we'll see what happens. By mid-May, May 21st, we'll just call it, that's where the price target landed, is going to be about $89. So that's, again, like 1.5%, which for the dollar is pretty significant, okay? So I do think the dollar has a ways to go down. Again, for those fundamental reasons that I'm not going to keep repeating myself for, I do think that the dollar will floor out around $89, $90. I can't see it going much lower than that. And after that happens, I do think that the dollar will start to see its rise back, its comeback, okay? Everything's super inflated right now, and I know the dollar's being printed. I do personally think the Fed is going to slow down is going to purposely, deliberately try to slow down the equity markets, because like every doge primarily is like the perfect testament to the fact that there's a little too much just hot heads in this market. There's a little too much capital that is just flying all over the place kind of wildly. And for those reasons, I do think that the dollar will see a comeback over the course of this summer. But that said, there are assets that I do think can do well with the dollar. Like we're seeing, like Bitcoin and the dollar going up right now. It doesn't always happen that if the dollar goes up, although it most of the time, if the dollar is going up, most things that trade against the dollar, primarily gold and silver, which you're seeing right now, will go down. But Bitcoin and cryptocurrencies, as all of you guys know very well, are kind of on a different wave, okay? So let's cover BTC quick. Bitcoin looking really good right now. I do think Bitcoin will come, just to keep this quick short term, I think we're going to come up to test. Same here, previous support as new resistance. It works both ways. So I do think Bitcoin could come up to like 58K. If we get back into this ascending channel that Bitcoin has been in since like the beginning of, since early May, or just like a week or so ago, I do think it's likely that maybe we see a move up. But again, you guys, volume is really dissipating here. Volume has fallen off a cliff over the past couple of months. We've been going relatively sideways. So if you look at this, like the price we're at right now on May 10th, or what's May 11th, sorry, on May 11th is exactly the same as we were on February 20th. So although Bitcoin has been looking pretty impressive and seeing a lot of price action over the past couple of months, we've been going relatively sideways, okay? So I do think Bitcoin is due for a little correction. Again, big money, I talked about this yesterday. I do think if hedge funds want to get in here, if big money, institutions, the whales, the market movers, the market makers want to establish a position in Bitcoin, which we all know they do, they're going to be waiting for a correction. And pretty much every technical analyst who's looking at Bitcoin right now knows that at some point we're going to come back down to about $41,000 to test the initial high of the current rally, okay? So I think it's very, very likely that eventually, I don't know when this, maybe we rip to the upside again. This is just my opinion. Once again, you guys know that. But I do think that Bitcoin will, over the coming, just say the next month, I do think Bitcoin will see about $41,000. At that time, I'm a big buyer of Bitcoin, okay? And I do think a lot of institutions are as well. And I do think that that's when we could see some exciting price action. So overall price target for Bitcoin initially is going to be about $51,000 to test support. If we break support, I think $41,000 is a pretty easy call from that point, okay? So that's Bitcoin. Ether just continuing to rip. Ether and blue sky territory. I do think Ether could see one more move to the upside. But then after that, I do think Ether is going to pull back and pretty significantly, okay? So as far as Ether goes, I'm a buyer of Ether probably around this overall support line. So let's just say like this hits like June 10th, a month from now. That would take us to about $2,300. So personally, a buyer of Ether around $2,300. Of course, I will keep you guys posted on that and my thoughts on Ether and all the good stuff. Again, I will make the crypto equity, the equity related crypto convo tomorrow, and we'll also probably cover EOS or do that on Thursday or something. But that's Bitcoin and Ether. Let's close it out with the shinies with the precious metals, silver and gold. So silver is looking good. Silver, unfortunately, the Stokes are curling down right now, which doesn't look good. The 4 hours look a little better. You can see 4 hours trying to get up, but almost curling down. Regardless, silver on the short term is following a beautiful uptrend. So let's actually go back to the daily here, because I'll break down a few things I'm looking at for silver. So silver did break out of a very significant downtrend in the beginning of February. Once it broke out of there, we've been in a pretty darn beautiful, like, you could say this is like an ascending channel right here. Like, this is definitely silver is following pretty beautiful, just textbook ascending channel, and it's been following this pretty well. In all honesty, I wouldn't be completely surprised if silver does once again come to test the bottom side of this, set a higher low on this medium term uptrend. But ultimately, I do think that because silver has been looking so strong for such a good amount of time, and silver miners look great as well. Again, you guys, there's a lot of silver miners that I'm excited about that are large parts of my portfolio at this moment. Those look bullish. Silver looks overall bullish. Silver, in my mind, is definitely a buy at this point, especially if we do see tech start to sell off. A lot of capital will be want to put to work. Commodities are a good place for that. Did just introduce some oil and oil positions into the portfolio, looking into copper as well. So there's a lot of exciting kind of commodity plays right there. Again, if tech starts to sell off and capital wants to go somewhere else in the markets, because of course capital still wants to be put to work, it's just looking for where to go. And in my mind, silver is a way better play than gold. Gold less volatile, but I'm looking for upside, and that's what silver has in store. So price target for silver, I do think, just because silver's been looking so solid, I do think silver will inevitably see a breakout. When it breaks out, my initial price target for silver is going to be to test this line that was once line of support here, tested as a line of resistance. This trend line is definitely in play. If we see this trend line tested, if silver does break out, if we do see this, just May 19th, the B day. So over the course of the next week or so, that would take us to just about $30. And then if we can break, I would say what was silver's high? So silver pretty much double top tier. If silver can break, honestly, if silver can break $30, like 30, we'll just say if silver can break $31, then honestly, I think we're off to the races from a technical perspective. And when silver does break, when and if, of course, it does break about $30, $31, just play it safe once again, I do think this very, very strong trend line will come into play right here. So beginning over a year ago, after that black swan, after silver and everything else sold off, this trend line right here, you can see all these points of resistance. Once it broke out, silver started ripping, came down, broke below it, used it once again as resistance. I do think this line of resistance will come into play once again. And considering silver's all-time high back in 2011 was at $50, I think there's a lot more upside. There's a lot of fundamental reasons for the amount of above ground silver is significantly less than above ground gold. Silver is actually an applicable metal from kind of an industrial perspective. So there's a lot of fundamental use cases for silver. You could say the same for gold, but again, considering silver's all-time high was around $50, you're looking at almost a 2x from here. And I do think that over the course of the summer, because last summer was so strong for silver, I do think history could very well rhyme, and we could see some exciting price action for silver and maybe even new all-time highs for silver. So again, we're kind of playing this day by day. Silver, although it's looking good, is moving very, very slowly. And to sum up my thoughts here, you guys know after that whole spiel, I'm bullish on silver. So it's going to be very exciting to see if silver does break about $31. Let's close it out with the yellow stuff. That is gold. Gold getting very close to a very, very strong trend line. If gold, I don't think I've touched on gold for a while now, but gold coming very close to my price target here. And if gold can break about 1850, 1860 over the coming week or so, then I think gold is going to see a breakout. Like from a technical perspective, gold will break a very strong line of resistance beginning almost like all the way back in August, after gold and silver peaked back in August. Again, over the summer, like from the course of June to August, gold and silver absolutely ripped. So again, I do think we could see something similar. Like history doesn't repeat itself, but it does rhyme. I do think we could rhyme over the course of this summer as well, especially again, if tech sells off, capital will just flow from tech into other more promising areas of the markets. I do think precious metals have a place in that equation. So maybe we see that. Also, if gold can go up another if gold can go up another like 4% over the coming week, even like that's actually like 2%. If gold can go up another 2 to 3% over the coming week, I do think that gold will see a breakout. And if gold does break out, I wouldn't be surprised if it tests a very, very strong trend line. Gold's market cap is massive. I believe it's about $9 or $10 trillion at this point in time. So from a technical perspective, all I'll say is that this is a very strong line of resistance right here on gold's very long-term trend line beginning almost 2 years ago in June of 2019. Very strong line of resistance. This trend line did come into play to dictate gold's market top back in August of 2020. If we see a breakout again, it might take a long time to come up to this, but I do think that at some point in the future, will it happen this summer? Pretty unlikely, because that's a pretty strong leap for a $9 trillion asset. But best case scenario for gold is going to be 2,500 plus. So I would be surprised if over the coming, I'll just say year, we see a $2,500 plus gold, which is not very exciting, especially in this market environment where we're just like 2-3x our money in a week. But again, from just a sound money perspective, if you're just trying to keep your wealth safe, gold is a pretty safe bet. But again, silver is a lot more exciting to me. So we'll call it there, you guys. That was a lot. I'm sorry if I was kind of all over the place, but that's kind of what I'm signing up for if I do a macro analysis. Again, you guys, the point of these videos is just to take a step back, take a bird's eye view, because it's very easy to tunnel vision on specific sectors of the market. And those are, a lot of times, as you guys know, crypto specifically, super exciting, way more exciting than this to most of you, to me as well. But it's important to understand what's going on in the macro, what's going on in the entirety of the financial ecosystem. Because like everything else, like every other ecosystem, everything kind of impacts. Like the larger, it's all fractal. So the larger scale things do have an impact on the micro thing. The macro has an impact on the micro. I'll just close it out with that. So please let me know down below. If you're still here, throw the 100 emoji down below with some wave emojis as well if you want. Let me know if you watched till the very end. I truly appreciate it. It's crazy if you listen through that whole thing, but you're a real one. I truly appreciate you. And also let me know what sector in the market you're most excited about right now, because again, things are a little funky, but that creates for a good, it stimulates the mind. It makes you think, okay? So always thinking, always learning, always growing, always getting better. So we'll call it there, you guys. Catch you guys downstairs in the comments. And until next time, always remember, take action, make waves. Peace.